Hello class, let's talk about calculating GDP. GDP is the market value of all final goods and services produced within a country in a given period of time. Basically, we are trying to figure out what was produced during a year. We have here this very simple economy for an example. In this economy, we have basically 9 goods and services that are produced within the country. Now, it is easy to see that if we calculate price times quantity, we should be able to get what we call the market value. So, for simplicity's sake, let's go ahead and do that. If you calculate the market value for each good or service, you will be able to get the total GDP for this country. Remember that GDP is measured in dollars, and we will have 3,193,050 for GDP for this very simple economy. Now, obviously, an economy like the US has millions and millions of products and services that are produced on a yearly basis. So not only is this method unrealistic, it is very improbable to calculate. Therefore, GDP has to be calculated using one of the following methods: the expenditure method or the income method. These two methods are based on one simple fact, that one person's spending is another person's income. For simplicity, in this video, we will focus on the expenditure approach, which adds up all the spending on all final goods and services produced in the United States during a year. For the expenditure method, we basically break down GDP into its components. Y is our GDP. Y is equal to C plus I plus G plus X minus M. Let's go over the key components of GDP. C. Consumption. Personal consumption and expenditures consist of purchases of final goods and services by households during the year. This is the largest component of GDP. What are some of the things that might go into consumption? Here you will see services such as dry cleaning, haircuts, air travel. We also include things like non-durable goods, soap and soup, or any type of food, and durable goods such as furniture and kitchen appliances. Durable goods are expected to last at least 3 years. Investment, I. For investment, we see the spending on new construction, new capital goods, new software, or a net addition to inventory. The biggest category in investment is investment in physical capital, such as new buildings and new machinery. One more thing that is added into investment is construction of new household dwellings. Basically, if you're building a new house, it will be counted in investment. Inventories are what businesses do when they're stocking up on things like computer parts, finished goods, or new items waiting for sale. Government spending. What we count in government spending is anything that the government spends on that is a good or a service. This is not to be confused with a government transfer, such as Social Security or disability checks. Net exports. You might be wondering, why is it that we're counting things that are not produced in the United States, which would be considered imports? The US is importing something from another country. You must look at the formula. In the formula, imports come out as a negative. Let's look at the following example. Let's say that you go to the local supermarket and you're going to buy a non-durable good such as soup, and you decide to buy a soup that is produced in another country, let's say Japan. In this case, you will be counting that soup for consumption. However, it must be then subtracted as an import. This is why it is very important that we calculate imports into our GDP equation. To better understand what the expenditure method is all about, let's go through these 10 examples. For each example, you must determine if it's going to be counted for GDP, and if it is, you must classify it. Let's begin. For number 1, you spend $7 to attend a movie. The answer of whether this is counted for GDP or not is yes. This will be counted for GDP. Now we must classify it. This is spending by a household on entertainment. So we would classify it as consumption. Number 2, a family pays a contractor $100,000 for a house he built for them this year. Remember that in order for something to be counted for GDP, it must be produced during this year. So this will be counted, and since this is a household, a dwelling, it will be counted in investment. A family pays $75,000 for a house built 3 years ago. Now normally, you might think that this is going to be a type of investment since a house is physical capital. However, it was built 3 years ago. In order to avoid double counting of goods and services, we must only count production for this year. So, this one will not count. Number 4, an accountant pays a tailor $175 to sew a suit for her. This would be counted as consumption. The government increases its defense expenditures by $1 billion. Again, we have to ask ourselves, is the government spending in something, or is the government transferring money? In this case, since the money is going towards defense expenditures, we will count it as G. The government makes a $300 Social Security payment to a retired person. Anytime you see the word Social Security or any other form of transfer payment, remember, it is not counted. Remember, this is not spending on a good or a service. Number 7, you buy General Motors Corporation stock for $1,000 in the stock market. This is a financial transaction. Nothing is being produced. So, this one does not count. Remember, as you're going through these examples, that we're basically adding layers to what we count in GDP and we don't. So, for examples such as number 7, we must remember the definition of GDP. We're trying to measure production. If it's some kind of financial transaction or transfer payment, nothing is being produced. At the end of the year, a flour milling company finds that its inventories of grain and flour are $10,000 above the amounts of its inventories at the beginning of the year. Basically, what this example is saying is that this company invested in inventories. That is a key component of investment. So this will go as I. A homemaker works hard caring for her spouse and 2 children. Now, this is one of the things that GDP doesn't count. Technically, a homemaker is making production. He or she is providing services to their families. However, this is production that doesn't count because there's no way of figuring out how much production is being made. So this one, unfortunately, will not count. This is one of the reasons why GDP is undervalued, because things like household production is not counted. Number 10. Ford Motor Company buys new automating robots. Robots are an example of physical capital, which means this would be investment. Key word here, these are new, meaning they were produced this year.